Hello everybody, hope that you are doing very well and welcome to this evening's Contenders live stream where we are going to be going through pivot points. Thank you Trader R for the insight into the pivot points. I think this is obviously it's been around for a long time, but they were really popularized by Trader R inside of the group over the past year or so. Because he found great success with them, finding his own method of using them. So naturally from that, there has been loads of questions. So that's what we're going to be going through tonight, pivot points. So I hope that you really enjoy the live stream and you learn something new from this one. It should be really interesting. It should be a really interesting live stream for you. So let me just some of you are probably already aware if they've been watching the streams over the last few days. I've reset a lot of the settings. I had to factory reset my PC. If someone could just confirm that this sounds okay, there's no stuttering of the microphone, it's not going in and out, and it sounds audible. There he is, my man Technic with the sounds okay. Well, that's absolutely brilliant. I'm always slightly worried about that, but there we go. So let's begin. Pivot points. Obviously the disclaimer, everybody knows the legal stuff by now. So the Contenders live stream that we got tonight, really simply, we're going to be going over pivot points, how to use the pivot points, and then ending with questions about tonight's topic. So this is going to be, obviously the questions are about tonight's live stream. If it's an off-topic question, ask that in Discord because it won't be presented obviously in tonight with the questions. You might be wondering, where's chart of the week gone? Because chart of the week is not in this stream, and that's obviously because of the fact chart of the week now is in its own separate live stream. So Mike has already done the chart of the week today in its own live stream, which you can obviously watch across now on the website. So if you haven't watched chart of the week yet, that's released every Wednesday along with the Contenders streams, but it's in its own separate video. Again, the reason why we put it in its own video, well, really simply, you can dedicate more time to it and give it more attention. So we felt that it was, rather than putting it inside of this stream, chart of the week will have its own video and its own section of Discord. Obviously, its own section of Discord is chart of the week there under the Contenders. And yeah, that's really simply why it's not included in the Contenders live stream anymore. It's because it has its own video, which should be even more beneficial than it was before. Also keeps the live streams more focused towards the topic that we're teaching. Yeah, that was based off of feedback. People wanted that, so that's what we done. So I hope that you enjoyed that change. And if you haven't watched Chart of the Week, go watch it right now because it was another really good one. Thank you so much, Mike, the altcoin god. So, pivot points. Pivot points then. So, pivot points, I'm sure many people kind of know what they are, but this is just for everybody that doesn't know. Pivot points, they can be basically used as targets of a move. So if you're looking to long above P, they can be used for targets of your trade, essentially. Pivot points can give an indication of an invalidation of a setup, e.g. if you're longing the P, again, this is going to make sense as we go through the video, but if you're longing point P and your target is, let's say, R1, then you could use a stop loss of maybe S1. So basically, it's possible to design, if you wanted to, a whole strategy just using pivot points. You know, they give entries, they give targets, and they give stop losses. So yeah, that's a that's something that you can use on with pivot points. They do have a whole strategy behind them. And then this is the shout out to Trader R. This is obviously his strategy. So I just want to emphasize that this is totally Trader R's strategy. This is not my strategy. I did not come up with this. Just so everybody knows this, I'm not trying to take credit. Trader R is the guy who found the strategy with the Chinese pivots, okay? And this is what price can be drawn towards. And this is why pivot points became so popular in the group, because if it wasn't for Trader R, I don't think anybody would look at them. So yeah, that's what we'll be going over tonight in these points. So first of all, how do you get the pivot points? How do you set them up? So really simply, what you want to do is go over to TradingView, click on indicators. Okay, click on built-in, type in pivot points standard, and there they are, pivot point standard. Okay, so they're called pivot point standard. I personally, I've used pivot points in the past. We're talking 5 years ago. I was using pivot points. When I was into stock trading. I don't really use it on cryptocurrency, but pivot points, when I used to use them, I used to always use them on the Fibonacci type. Why? Because I like using Fibonacci settings. I love my Fibonacci retracements. I love my Fibonacci extension, and obviously the formula behind where the pivot points, the R1 and S1, the way the calculation is formed is different. Just so you can see this, by the way, if we just click on pivot point standard here, what you will see is you could choose traditional Fibonacci, Woody, Classic, DM, Camarilla. There's you can choose which ones you want. Trader R will use traditional pivots, so he will just use the traditional. If I'm looking at an actual pivot, in terms of the R1, S1 targets, I like to use Fibonacci, but that's because I'm a big fan of Fibonacci. My work revolves around fibs. So there you go. That's why I would use it on Fibonacci, but you can, play around and see what fits best for you, really, can you? This is an example here on Ethereum. You can see how you had your P1, you come down to S1, so you found support off your S1 really well. You moved up to R1, you found a bit of resistance, you broke through R1, and you went to R2. So you can just see here on a live example that the pivot points are pretty well, they're pretty good. Support off of S1, resistance off of R1, resistance off of R2. Okay, and if you zoom in here really locally, you can also then see how R1 was resistance into support. Pretty nice, no? So that's what you can. It's just a random live example actually that you have there on Ethereum. But these are the settings that I personally use: Fibonacci, untick, and then change the colors of the P1, S1, R1, and R2. I don't use R3s, R4s, or R5s. I would never need that much. Well, I guess if you break R1, you can add on R3, for example, and S3. But the thing is, if you add this on, it's gonna like change the scaling a lot because they're so far away from current price. I don't like the scaling like that. That's why I don't use them. I don't have them checked by default. So yeah, those are the settings that I use if you want to mimic those. So really simply, the pivot points are really, 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 really simple. Okay, they're so simple. You have the pivot itself, which is going to be your center line. And then above that pivot, you have R1 and R2. You can class this as resistance 1 and resistance 2. So naturally, resistance 1 and resistance 2 can be used as take profit targets if you're longing, let's say, from the original pivot itself. So here, session opens, you hold the pivot as support. You could, for example, say, okay, pivot support is holding. I'm going to long off of the pivot, and R1 is going to be my take profit 1, and R2 is going to be my take profit 2. You could use it something like that, and that's how they're take profit targets. Or alternatively, a way you could potentially view this is look for a long off of pivot, that's simply the P, and you could say to yourself, okay, if we reach R2, you could say, again, you have to see confluence. If you just trade off these pivot points, you'll lose money. Definitely, you'll lose money because you have to see more than just this. But if you start to see like confluence, let's say at R2, where you're on a 1-to-1 Fibonacci extension, and then you're starting to see from a bigger time frame like a CC on a 1-to-1 extension on the Fibonacci R2, well, then you have 3 different points of confluence, and you could say to yourself, if we've reached R2 in a relatively quick amount of time, well, then R2 could actually perform a resistance which could be used for a short position, because you could say this moves locally overextended. So you could short R2 and your target could be R1. You could say, right, this is too overextended, it's gone too quick. I'll short R2 and my target will be back down at R1, or even pivot, the pivot itself, and keep the range going. But generally speaking, yeah, these are your take profit targets if you long the pivot, and simple as that, really. Then it's really not that difficult theory. Just a random example from literally, this is yesterday. The pivots are going to change every single day. And this is just an example randomly yesterday that we hit R1 and we obviously got a pullback to around, what did we bottomed in the end around 48,000. So you got like a $2,000 rejection off of R1 yesterday on Bitcoin. So really simply, if R1 and R2 have resistance, well, guess what? S1 and S2, they can be used as take profit targets if you're shorting, or alternatively, obviously, they can be used as long entries. And you have to always remember context. Right now, we're in a massive bull market on Bitcoin. Bitcoin looks really bullish. So naturally, you might be more opposed to longing off of our S1 and S2 rather than shorting. Some people might be think that's a better. So yeah, you could essentially look for longs off of S1 and S2 if that's the way you prefer. So going into a bit more specifics then, with the pivot points, okay, the 15-minute chart is the best for pivots intraday. So don't go on to other sort of time frames. Just if you're trading intraday and you want to know those intraday pivots, that will change every single day. Every day you'll have a new set of pivots. So, and these are obviously going to change on your standard charts. If you're looking at Bybit, you're going to get a new pivot at daily open, and you're going to get a new pivot at daily open. So they'll last 24 hours. And for these daily pivots, you just generally want to stick on the 15-minute chart. You don't need to go any lower. You don't need to go any higher. 15-minute chart is the best time frame for your intraday pivots. Okay, so that's really, really, really important. 15-minute chart for your intraday pivots. If you're a swing trader, what's the best time frame? That is the 1 hour chart. So if you're a swing trader, just stay on the 1 hour chart. You could go up to the 4 hour, but 1 hour is what I recommend. So just stick on the 1 hour chart, and then you're going to be looking at your swing trade pivots. So these are going to be trades that could last a few days. And these are also going to be coming new every Monday open. Okay, so every week you're going to get a new set of swing trading pivots, and they'll be given to you every Monday. So the intraday pivots are given to you once a day at the daily open, and the swing trade pivots, they're given to you once a week on Monday open. Okay, so as the clock chimes from Sunday to Monday, you'll get your new set of swing trade pivots. So this is really, 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 really important information. If you want to use these pivots, you need to stick on the 15-minute for your intraday, and you need to stick on the 1 hour to look at your swing trade targets. Okay, really important that you know that. And as I mentioned here, so I like the Fibonacci type pivots, but it can be adjusted. So if I just flick over before we continue, so look at that for an example. Once again, you can just really funny that this is the case. Well, here you go. Look at that. You've just went straight into that R1 again. And you're pulling back from it already. So you can see that these pivots work. And these are the settings that I'm using, Fibonacci pivots. Okay, so if I put it on traditional, you'll see they move. You'll see these pivots will move. Let's put it on traditional. You see that pivot moves massively. If I put it on Woody, the pivots are going to move a little bit, not much. If I move it on classic, they're never going to move again. But I don't use any of those. I think just Fibonacci. Okay, Fibonacci is the best. So, but look at that Fibonacci pivot. We literally just hit that Fibonacci pivot absolutely perfectly, and look at the retracement that you're getting. That's pretty good, no? It's pretty cool. Otherwise, why else would you be thinking you're rejecting here? I can't imagine there's going to be much of a confluence at 1839. But you had R2 there, pivot, Fibonacci pivot. You hit that and you retrace. I used to use this a lot in the stock market, but they're pretty good. But yeah, here your pivot, you see, you get your new pivots here at the daily open. So you see, we switch new daily open. That's when you get your pivot straight away. You break down below the pivot. You retest that pivot as resistance. So look at this. It's just really I love it when we get perfect examples of the tool that I'm explaining. So here you get daily open. You open daily open, and you get a rejection instantly on daily open. So you open daily here. That's where you get your new pivots. You instantly get a move down. You backtest your daily open pivot, and from backtesting the daily open pivot, you move down to S1. From S1, you find support. Remember, we're in a bull market. One expects that to happen. So we open the daily pivot with a rejection. We backtest the pivot as resistance. It holds. We move down to S1. From S1, one would generally say in a bull market, this is where you're going to be looking to long. For example, you could long here, have a stop maybe below S2, for an example. And then, guess what? You make your way up to R1. You find resistance R1. You break through R1. You find resistance R2. From finding resistance R2, you come back, you hold around R1. And then just literally minutes ago, we make our way up and test R2 again absolutely perfectly. Okay. So obviously one would say the more times that you test this R2, the more times you test it, the more likelihood it is to break through. But that's your resistance at the moment. And really simply, so this is on the 15-minute chart. That's going to give you your new pivots as soon as the day opens. And you can just see here, live example today, no hindsight, pivot rejection, down to S1, bull market finds support of your S1, straight up into R1, straight up into R2. What you could say, if we break through R2, you can add on R3s, and that's going to give you another target. And you obviously have your S3 at the lows. You can't add on any more on the Fibonacci, okay? You can have a max of R1, R2, and R3. It doesn't support anymore. Obviously, you can test out these other ones if you want to. You can test it out with traditional, Woody, classic. You can try out the others. I don't use them. If I wanted to use it, I'd only use Fibonacci. But you can do what you want, obviously. And I would not really recommend to show the historical pivots. I don't feel this is needed. If you want to back test, I suppose you can tick this. But in my opinion, it just becomes really, 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 really messy if you start adding on this. So I would never have this ticked. I don't see the point in it unless you're doing back testing. Otherwise, there's no point to have that one. And yeah, use Fibonacci. I generally will not have this ticked. Obviously, if we break through R2 here, then it makes sense to add on R3. And then your next target would be 1877. So I hope that makes sense. And if we remove that, and now you're going to see, so this is our intraday trades. Yeah, this is our intraday trades. Now we'll move to the 1 hour chart. And look at this, the 1 hour chart. This is for our swing trades. So this is a swing trader's perspective. Look at this, yeah? Pivot came out on the 15th of February. 15th of February was Monday open. So on our Monday open, we had our pivot formed. We now have targets to the upside because one would generally expect, we're in a bull market, we generally expect moves to the upside. So you can see here the original pivot of Monday open has held as support really well. So this is our Monday open pivot support now. So our next target to the upside is going to be R1. That's 1868. And this is for swing traders because these pivots are going to last one whole week. So within the next few days, within this week, basically, that's going to be your target, R1. So you could expect potentially get resistance there. Obviously, if we break through R1, you look for R2. Pretty simple, no? Simple stuff. If we were if we were in a bear market, for example, we could have been looking down for S1 and S2, but obviously those are less likely to happen when you're in a massive bull market. So, yep, that's that. Oops. I'm just thinking if there's anything else I wanted to mention before we go on. Was there anything else? No, there really wasn't. So just to emphasize again, that pivot happens on Monday open on the 1 hour chart. When you're on the 15-minute chart, that pivot happens every daily open. Simple, easy to remember. No, the difference between the types are basically the way that you get your targets. What's the word I'm looking for here? The calculations are obviously different. But personally, if you want to do your own research on the DM pivot, I've never used that in my life. So I've never used like the DM pivots in my life. But if you want to go off and do your own research on DM pivots, for example, you can obviously do that. But I've never ever used it in my life. But maybe you want to try DM pivots. That's fair enough. Now you have the knowledge of how they work because they obviously the workings of them are the same. It's just the calculations are different. But I like Fibonacci because I love to use Fibonacci tools. And that's where you can start to see confluence of a Fibonacci pivot and a Fibonacci extension and a Fibonacci retracement. You're going to get confluence with Fibonacci. And that's kind of at Chart Champions, our main tool, I think. So, so Trader R pivots. What I will say is, I'd love Trader R to come on and do a pivot live stream. So I'm going to give a light overview of his pivots. But obviously the main man himself, Trader R, hopefully is with us one day, and he'll come on and do a part 2. So I would say that this is a light overview. This is not my strategy. Hopefully Trader R, the legend himself, will come on one time and do a stream for you as a part 2. So I'd label this as like part 1 of the live streams, and hopefully we get a part 2 from him. So Trader R's pivots are based off of Chinese exchanges. Okay, so his pivots are based off of Chinese exchanges, and then the P becomes a target for the move. It's basically like a naked point of control, but instead it's like a naked pivot because they become visible halfway through the UK trading day. So you're going to see this one. I think at OKCoin it comes on in UK time 4 p.m. So like at 4 p.m. you're going to see a naked pivot on the chart essentially, and just like your naked point of controls, again, there's no guarantee that this comes down to that level. I think that's everybody obviously knows that there's no guarantee that you hit these points, but just like a naked point of control shows a lot of liquidity, price is generally going to be attracted to those liquidity pools. These naked pivots that come on halfway through the day, price is generally going to be attracted to it, or at least find support for that level. I feel that's pretty self-explanatory. Price basically is going to be drawn towards those levels, or just simply it's a support or a resistance level. Okay, and again, there you can use those on the 15-minute chart for your intraday points. Okay, this is generally an intraday 15-minute chart setup. So here is an example from a few days ago on Bitcoin, where you had this is Huobi, but Huobi and OKCoin, it doesn't really matter. You obviously have your Chinese exchanges, Korean Chinese exchanges, and here you have your pivot form. You can see that comes in at around 47,600. So you could say to yourself, okay, we're trading 48,688. Price is going to be attracted back down towards 47,700, and I could look to buy this support level, or I could look to short down to this support level. This is our naked pivot that's just formed. Price is going to be attracted to this. It offers a support trade. Then P becomes visible on the chart at 4 p.m. in England time, and this is the reaction. Okay, so you can see the P pivot gets hit on OKCoin, and a great bounce happens. So the naked pivot target is hit, and that is the same pivot point. So you were looking down for this pivot, and then that pivot point gets hit, and you get a bounce. Okay, 47,700. You can see you come down in the end to around 47,500-ish, but you come down, you tick that pivot point, and you get an instant bounce. Well, we all know what the reaction was. What are we sat at now? Like 50. How many? What Bitcoin price now? 50. Oh wow, we're moving up. $52,300. So, they're obviously great supports. So we hit that a few days ago and price never looked back. So shout out to the pivot points. That was a massive support before a nice increase. So that is the Chinese pivots. Okay, so just to recap those. Okay, just to recap those Chinese pivots. They only become available at 4 o'clock in England time. They're going to be used for your intraday moves. So on the 15-minute chart, okay, they're going to be used. I would just look at them on the 15-minute chart. Again, I would just say 15-minute chart. 4 o'clock England time is when they're released, and they're just like naked point of controls. Price is generally going to be attracted to it once it's formed. So you can use this as a support level. Price hits that support and gets a lovely bounce. So it's essentially just a support that comes available halfway through the trading day. And Trader R is his strategy. He found this works amazing. So that's as in depth as I can go on this. Hopefully we get Trader R for a version 2 or number 2 of this, and he can go into more depth, maybe different time frames that he uses this on, how we found this strategy, etc. But at least now everybody can stop bombarding him with questions, because everybody now understands the theory behind that. So it's not that hard. It's just like putting in the work originally to find it. So there we go. that is the pivots. Okay, so pivots can be used as a strategy on its own. That's obviously looking at P for your original pivot. You can then use S1 and S2 as targets for shorts or support levels, R1, R2 for resistance, or if you want to, shorts. Essentially, yep. It gives you clear levels. There's no, don't have to guess, it gives you an exact level. And obviously price is attracted towards those Chinese naked pivots. Again, trader R strategy. So does anybody have any questions? I don't feel that this was too difficult of a live stream, but nevertheless needed because of the volume of questions that were coming in about it. Cool, there are some questions. Let's see. What does the pivots represent? So essentially, the pivots are going to be they're just representing level. I'm not really sure what you mean by what do they represent. So this just represents like a resistance. This just represents a resistance. This just represents a support. This just represents a support. And this is the pivot of your, on the 15-minute chart of your daily open pivot. Yeah, I'm not sure what you really mean by what do they represent. They just represent support and resistance levels. Okay, so this just represents a resistance. This just represents a resistance, and this just represents like a support. Okay, and the pivot itself is just like the daily open pivot. So this is just the pivot that you get on the daily open. So you could say, for example, I don't know, you could say this is your fair play line. Maybe like the pivot itself is neither a support or resistance until it's broken. And here you break it to the downside, you could say it's resistance. And this is then your support. Or if you break the pivot to the upside, and then this is support. So I guess you could say something like this. If you're above the pivot, this is bullish. And if you're below the pivot, then it's bearish. You could also view it something like that, I suppose, of what does this represent. Look at this. We're exactly on that pivot now, by the way. Yeah, and you'll see that the pivot itself is going to be the same on the traditional. So you see this is the exact same pivot. I'm pretty sure on Woody. Okay, the Woody is slightly different. Classic is the same. So the Classic is the same as the Fibonacci. The Woody is different. The DM, different. Camarilla, the same. So obviously, I don't use any of these other ones, so I wouldn't like to say, but yeah, for example, you could click on this Woody and it has a different pivot, but I have no idea how they calculate this, to be honest with you. We can just Google it a second. So Woody pivot calculations. So here, this is how they get the Woody pivot calculations. So I'd imagine then that that's different than, for example, we were saying that this is the same as the traditional. So if we wanted to see the traditional calculations and then compare it, tradicional. So this is how they calculate the traditionals. And then this is how they calculate the Woody. So obviously the original the pivot here is to get the pivot point. Yeah, previous high, previous low plus 2 times the previous close divided by 4, and your traditional pivot is obviously high, low, close divided by 3. So yeah, the calculations for the actual pivot itself are slightly different on these like Woody pivots, which I've never used in my life, by the way. They're obviously different than your standards, so that's why you get a little bit of difference in the actual pivot itself. That's pretty something to bear in mind, I suppose. If you want to go and test out these other ones, yeah, the pivot itself might be a bit different, but there you go. But yeah, they all represent resistance lines. So if you wanted to use these other ones, I don't really know why you would, but if you did want to use that, that still represents resistance, that still represents resistance, that still represents support, and that still represents support, and that still represents your pivot. But obviously the calculations are slightly different on those pivots. So I hope that makes sense. So if it doesn't, then you can ask another question. So what is it based on, and how are the levels calculated? So again, I'm not really sure what these other things are based on. Obviously, I know Fibonacci is obviously based off of Fibonacci, but I'm not really sure what Woody and Classic and DM and this other thing are based on, if I'm totally honest. I've never ever used it in my life, so I really don't know what they're based on. I think you're probably just best off like Googling some of these other things, because I have no idea even what like Woody pivots are. I've never used them in my life. So, and how are the levels calculated? Oh, that's pretty cool that we had this loaded up. So that's the calculation. If you want to look at the calculations, that's how they calculate their pivots. Okay. So yeah, they represent support and resistance. What are they based on? Well, each of those different, your Fibonacci pivots going to be based off of Fibonacci type work, and your Woody pivots are based on whatever this, I guess somebody called Woody decided what they were going to make a pivot off of. And how are they calculated? Well, the easiest way, probably, if I'm honest with you, is just type into Google whatever sort of pivot you're using, and then just look at the calculation. That's for the standard ones. If you're interested in that's obviously for the Woody ones, if you want to use Woody pivots. Is P equals daily? Not always daily open, no. So the pivot itself won't always be daily open. It's close to it, but no, that first pivot is not always daily open. So no, the pivot is not daily open, but it's formed at daily open, and it's obviously generally going to be close, but it's not always going to be daily open, no. So R3 on Fibonacci is the same as R2 on traditional. I don't know. Let's take a look. So we can add on another pace of pivots, and we'll put on our traditional and our Fibonacci. So traditional, what was the question? So R3 on Fibonacci is R2. Yes, you are correct. That is correct. So you asked that question, and I didn't even know the answer to it. But yeah, there you go. R3 is the same as R2 on traditional. That is the case, yes. Where on the open candle do you take it from? Where on the open candle do you take it from? I don't really understand the question. Where on the open candle do you take it from? So what you have to realize is this is all automatic. So you're not having to calculate any of this, okay? So you don't have to calculate any of this manually. This is all automatic. So where on the open candle do you take it from? I don't really understand the question. You're going to have to ask again, because I honestly don't really understand the question of where on the open candle do you take it from. So this is all automatic. You're not having to calculate anything, okay? So so when you hit the new daily open tonight, these are going to reset. These will disappear, and your new pivots will be generated tomorrow. All automatic. As soon as the daily open, bam, within a second, the new pivots will come. So that's all automatic, okay? So where do you take it from? I don't really understand what you mean by where do I take it from, to be honest with you. Yeah, I don't really understand that. Just ask the question again, maybe in a different way, because I don't really understand what you mean there. So that's that one. Got some more. What is your main confluence of pivots? Fib retracements, high time frame levels, harmonics. So I really don't use pivots very much. Okay, so in my trading, I am not really using pivots. To be honest with you, this string was primarily because of Trader R talking about pivots a lot. I personally don't really use them. Not to say they're bad, but I personally am very rarely looking at pivots anymore. You know, it's just, I don't know, don't really use them myself. But fib retracement, so you could use this. I mean, you can see that they work. But for example, if you were looking at this right now, what's some ways that you could look at confluence? Well, you could say to yourself, well, you have a pretty obvious, I think you have a pretty obvious confluence in terms of a horizontal here. Resistance, 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 resistance. So that's a confluence, isn't it? Simple horizontal level of resistance. You could, for example, let's say that you had a pivot. I don't know, let's say that you had a pivot high up here. You could pull your fibs from the high down to the low and say, let's just make a hindsight perfect example and say your pivot was here. And then you could say, okay, we have the CC resistance in R2. That's another confluence. You could say, for example, pull a Fibonacci extension from the lows to the highs to the lows. And then let's just say your 1-to-1 was in there as well. Well, then you have a CC in the 1-to-1 extension on R2. And, you know, that's how you could sort of build up your confluences. So it's the same, you know, it's the standard fib tools that you'd basically look for on top of those pivot points. So if we hit R3, are we likely? No, I wouldn't say that's the case. If you hit if you're hitting R2, R3, you have to, this is the thing. Pivot points are so easy, yeah? They're so easy, but you cannot just think just because we hit R3 that you're going to return to P. Like, trading is not actually that simple. So trading is never, ever going to be that simple, and never is price going to hit R3 and you're going to think to yourself, okay, we've hit R3, we're going to go back to P. Trading is never, ever going to work like this. What you'd have to do is, everything is so context dependent. So you cannot think to yourself, okay, we've hit R2, we're going to come back to P. That's just not going to be the case. What you're going to have to think to yourself is, if you hit R2, for example, what other confluences do you have there? Is it likely? Because if you're hitting R2, that move's pretty strong, isn't it? That's a pretty strong move to the upside. So why would price be coming all the way back to P? It's possible, but it's so context dependent. How quick did you reach that level? What are the other confluences that you have at that level? Is price locally, are you getting bearish divergences at that level? If you're really overextended, you've got massive confluence, you've got bearish divergences, and then you get a market structure change, well, then it's really likely that you return to P, isn't it? But I would never, ever think to myself, right, we've hit R3, we're going to go back down to P now. 100%, I would never, ever do that. So is it likely to return to P? It's based off of a lot more factors than just the pivots. Okay. Really, really important to emphasize that. Do the pivots, i.e. the pivots from weekly open, do they still hold? Yes, they'll still hold from Sunday. So you get your new weekly pivots on Monday, and they will still hold significance all the way to Sunday. They would hold Monday to Sunday, and yeah, they're significant throughout the week. Can it be used for daily open strategies, open drive, open test drive? Yes, you could. You could essentially use your daily open strategies with this. Yeah, I don't see why not. And I suppose a good example of that is Ethereum, where Ethereum today, you could say this was an open test drive, for example, where you've opened, you've come back for a test, and then you've drived, and you've gone to the downside. Or I suppose you could use this as an open rejection reversal overall, where you've opened, you've got a move, you've rejected off of S1, and then you've got a full-on reversal. But you can see the original rejection was off that pivot. So you've opened rejection down, support, but then you've also rejected off of this support for a full-on reversal. I mean, look at this. This is really crazy. This resistance of R2 is still holding here really nicely. So yeah, that's a good question, Lemon. And I would say, yes, you can use it with the daily open strategies. Are the Chinese pivots strong because a lot of stop losses are in that area? Again, I hope you can understand that this is such a hard question to answer because the pivots are always in different places. So it's really hard for me to say like there's always going to be stop losses on that pivot because every single pivot is different and every single context is different. So it's just absolutely impossible to say that there's going to be stop losses in that area because we have no way of saying there's just no way that I could say there's going to be stop losses there because we never actually know where that pivot is until it's formed, sort of thing. So it might be that you've literally just ranging all day, back down and back and forth, and there's no stop losses at all on that pivot at one point. And then the next pivot that you form, well, then there's loads of stops because it's right at, that pivot's formed at 4 o'clock and there's a massive level of liquidity. And then that's obviously a really strong pivot where, yeah, there'd be a lot of stops. But I hope you can see how that question is just really impossible basically to answer because every single pivot is different and every single context behind a pivot is different. They're basically totally different. So the pivots are different levels. So you can use both. So it's not one's better than the other. You could essentially use both. You could use your daily open pivots on your daily open at my time daily open UK time, and then the Chinese pivots are formed at 4 p.m. So you could use those Chinese pivots at 4 p.m. for example, and the UK pivots during the day, which not many people look at the Chinese pivots. Not many people are looking at those, and that's why it's a really cool strategy that is really effective because let's say there's 100 million people trading Bitcoin. Well, maybe only the champions even know about this strategy. So it's like we have a tiny minority looking at this, and I don't think many people know about it. So you don't have to say one's better than the other, but you don't look at those Chinese pivots. I wouldn't anyway until you form it at 4 p.m. and then you can add it on. And those Chinese pivots are not going to show on Bybit. They're not going to show on Coinbase. Those Chinese pivots are only going to show on your Chinese exchanges. So that's why they're effective, because not many people are going to be looking at UOB or OKCoin, So those pivots will only show on the OKCoin charts. So you'd actually have to load up a new Bitcoin chart. And if you've ever seen Trader R's screen, he has like 100 exchanges. So he only takes the pivot. No, he only takes the Chinese pivots. Yeah, so he'll only actually take the P that forms. He doesn't look at any of the SNRs. No, just the pivot itself. Again, I just want to emphasize that this is not my strategy. This is Trader R's strategy. But I'm fairly certain he just looks at P. No, they will be totally different levels. So although they're similar, they are different. So yeah, you could essentially use that as confluence. Yeah. So they're that retracement tool is not ever going to be exactly this. It's using a different calculation than it would on the Fibonacci retracement. So in that regards, like the Fib retracement tool is totally different than the Fibonacci pivots. So yeah, you could use them as confluence. Yeah, definitely. Because they're not using the same calculations. Cool. Well, there we go. That's all the questions then that have come in. I'll wait to see if any more come in over the next few minutes. But I don't really feel that pivots are that difficult. So I suppose they're pretty self-explanatory in that regard. So what have we gone through? We've gone through when the pivot forms on 15-minute chart, when the pivot forms on 1 hour chart. We've gone through when the pivot forms on your Chinese exchanges. And we've gone through how Trader will look at the Chinese exchange pivot when it's formed and how that offers basically a naked pivot point. and then how you can use your pivots essentially as support, resistance lines and targets. And we have just a really another perfect example today of how that has acted as support, resistance and resistance. This is if you ever wanted like a perfect textbook example, well, you have literally a perfect textbook example. So always nice when that happens. So the next Champions live stream, obviously on Sunday, I'll be going through another trading setup. This is where I delete my technical analysis, do my technical analysis from scratch, end with a setup based off what I feel is the next highly probable trade. We're obviously to be trying to find an entry that I'm comfortable to hold for the next few weeks. Entry, stop loss and target. So a summary of tonight. Pivot points provide support and resistance. Obviously your S1, S2 are supports and your R1 and R2 are generally considered resistances. Intraday is for the 15-minute pivots, and your swing traders, you want to stick on the 1 hour time frame. Again, these are formed every single day, new set of pivots, and these are formed once a week on the 1 hour. And price is drawn to the Chinese naked pivots. So just like you got a naked point of control, price is drawn towards that. When you get your new Chinese pivot every day at 4 p.m, make a note of where it is, because price is drawn towards these Chinese pivots. Again, there's no guarantee that it happens, but price is drawn towards it. And if it is hit, you're generally going to be looking for your bounce off of your Chinese pivot, or at least a reaction off of that Chinese pivot. And again, thank you Trader R for sharing that with everybody, because it's a really effective and great trading strategy. So shout out to Trader R. I don't want to take any credit off of him. That was all Trader R. So that's all Trader R. Well done, my friend. And yeah, so that brings us to a conclusion of the pivots. How you can see that they are very effective. I mean, look at this. This is crazy. If we just like zoom in here and look at this, you're literally just up against it, rejection, up against it, rejection, up against it to the dollar now. Just really, that's really effective. So yeah, that's a brilliant live example, I suppose. And yeah, that's everything then. So I hope that you've enjoyed the live stream. Hope you found this useful. Again, if you haven't already, go and watch Mike's chart of the week. That's on the website right now. Really good live stream from Mike on the chart of the week. And there's one thing that I want to make you aware of before we end here, and that is when this video ends. So when this live stream ends, it will be taken offline of YouTube. We're actually working on a fix for this. So in the next, don't want to say exactly, but hopefully within the next month, we'll have a proper fix for this, where it won't need to go offline straight away. But there's obviously a case of, there's a reason why we're doing this, because of lots of scammers, basically. So when this live stream ends in a few minutes, this live stream will be taken off of YouTube. So just be aware of that. As soon as the stream ends, it's off of YouTube, and it will be uploaded on the website. This takes about 1.5 hours. So this is why it's really important to if you want to watch the live stream straight away, the same on Sunday's Champions live stream, make sure you turn up at 7:30. Do not be late. Okay, turn up at 7:30. Watch the live stream live as it's happening. That's advantageous for you, because then you can ask your questions and you can get your answers during the live stream. That's a big advantage of being on the live stream. The second advantage is when this live stream ends in a few minutes, it will be taken off of YouTube. So if you missed the live stream or you're late to the live stream, it's going to be cut off in a few minutes. And then you're going to have to wait nearly 2 hours for it to be uploaded and rendered onto the website. So you'll have to go a few hours with no live stream. So if it's really important to you that you watch the content live in the time, turn up at 7:30, don't be late, watch the live stream with us, get your questions, get your answers, be a happy guy. Because I just want to make you aware, this video will be taken off of YouTube in a few minutes, and it will be directly uploaded onto the website, obviously as soon as possible. But the upload time and the render time of this getting from the YouTube to the website takes about 1.5 hours to 2 hours. So yeah, if it's really important to you that you watch watch everything really quickly, which obviously we recommend you'll hear really quickly. Just make sure you turn up on time, and there will be no problems. So I'm sure there's going to be a lot of questions of where's the video, We're going to delete this off YouTube now. I'll get uploaded onto the website. It will be available in 1.5, 2 hours-ish, okay? So yeah, hope that was very, very, very useful for you. I suppose what I'll say once again, thank you ever so much, everybody, and I will catch you inside of the Discord. So hope you've enjoyed, hope you've learned something. If you have any other questions that haven't been answered, obviously you can always ask across in Discord. More than happy to take any questions should you think of during the day. And I suppose that's it. Thank you ever so much, everybody. I hope you've enjoyed, and thank you once again. Cheers and goodbye. Catch you on Sunday.